Okay, so how much would it take exactly to retire early and be financially independent and do so with Vanguard Index Funds? What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and in this video, you can see I've got my Vanguard Index Fund shirt on today because we are talking about how to join the FIRE community, be financially independent, and retire early using Vanguard Index Funds. I've already done a version of this video with dividend stocks, but the truth of the matter is not everybody invests in dividend stocks. And you can absolutely be successful and join the FIRE community using Vanguard Index Funds. In this video, I have expanded on my previous video and actually utilized every single one of the Vanguard Index Funds that have been in existence since at least 2006. And we're gonna take a look at what exactly it would take. How much money would you need to invest based on your annual salary? How much of your assets it would take to invest on a monthly basis? And of course, based on what your actual goals are to become financially independent and retire early. We're talking financial independence and Vanguard Index Funds. So hit that like button, hit the subscribe button, and let's get started. Hey guys, Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comment. All right guys, you know how much I never want to waste your time, and I always want to deliver massive value every time I jump in front of the camera. So without further delay, let's jump right into the spreadsheet. All right guys, just like the previous FIRE video where we did with dividend stocks, we've got a very similar spreadsheet, but it has a few differences because we're not talking about living off of dividend income, we're living off of assets, and I'll explain that in just a second here. It's got a very familiar look with this dashboard here where we've got the annual income, which you can input yourself. As a reminder, you can get access to this spreadsheet by joining the Patreon community. There's a link in the description below if you want more information on that. So we have the option to input our own annual income here, as well as what percentage of that income we would like to invest. This number right here flows from this percentage of this income. Then we input here exactly how much money we would like to have as monthly cash flow. If we're starting with an initial investment balance, we can plug that in here. We have today's date. We have the desired FIRE date. When do we actually want to be financially independent and retire early? And then based on this date, it will tell us what our monthly cash flow would be, what the total balance would be, and whether or not we achieved our FIRE date. Now the big difference here is we're talking about index funds and not really living off of dividend income, because that's not really the objective of the majority of Vanguard Index Funds out there. So instead of living off of dividend income, we're gonna be selling a portion of our assets every single month. As a result here, the standard is the 4% withdrawal rate, but I've got a few options here. We can utilize 4%, 3.5%, 3%, or we can even go up to 4.5%. The standard is 4% here, the idea that you can live off of 4% of your assets and adjust that according to inflation in the future. Now, there are some natural risks when you are selling your own assets, including drawdown risks. And then there are concerns about sequences of returns and if you are drawing down your assets during a bear market. But that's not the point of this video. Just know that there are other considerations that we could take into consideration here. But really, the truth of the matter is here, we're talking about achieving FIRE based on what we assume will be a withdrawal rate of either 3, 3.5, 4, or 4.5%, which you can toggle between, and I can show you that here in a second. As you can see along the bottom here, we've got all of these different assets. Let me show you this dashboard tab here. I utilized ETFs for the most part, although I did utilize the Vanguard S&P 500 index fund, not the ETF, just because the ETF was only in existence since 2010, and I wanted to capture at least data from 2006 or before. Whether we're utilizing the high dividend yield ETF, the dividend appreciation ETF, all the way through large cap growth, small cap growth, the mega cap growth, all these different options here. We can utilize any combination of them based on the portfolio weighting tab here. So if we wanted to use 50% of the Vanguard mega cap growth and then 50% of the total stock market, we can do that. And of course, I've got all the data here for all of these different options here. So let's go ahead and start off here by utilizing just the standard approach here. We'll just take the total stock market and we'll put 100% in there, because I know that there are some people out there that are totally doing this right now. 100% in the total stock market. And let's go ahead and go back over to our FIRE dashboard. Let's start with the truly average Joe scenario here. Let's say that our annual income is $60,000. And let's say we want to invest 35% of our income. As a quick reminder, when we're talking about investing to become part of the FIRE movement, we're talking about abnormal levels of commitment to investing. So we're gonna see higher percentages of our income being invested here. It doesn't mean you have to do that, these are the examples we're working with here. You can obviously make some adjustments to this. 35% of our income here would equate to $1,750 as a monthly investment. Now this part here, what do we want to live off? What is the monthly cash flow we would need to join the FIRE community, where we would be financially independent and retire early based on that monthly cash flow? Let's say the minimum amount of monthly cash flow we need would be $3,500 here. And we're starting with a zero balance. As a quick reminder, all of our investments, we are reinvesting dividends. So obviously some of these investments have higher dividends than others. Pretty much all of them do pay dividends though. We're reinvesting all dividends we receive. All right, so let's go ahead and plug this in here. We're gonna assume a withdrawal rate of 4% here. So let's say we want to retire in 15 years. We'll go May of 2036. Have we achieved our FIRE date? No, we'd have a total balance of $725,000, which would lead to $2,116 in monthly cash flow. Now, if we increased our withdrawal rate, we also are taking on more risk that we would run out of money, but let's just go ahead and plug that in here. We'd be at 2721. Even at a 4.5% withdrawal rate, we're still having issues with monthly cash flow, so that's not gonna work. Let's go ahead and plug this back to 4%. Let's change our FIRE date here. Let's say May of 2041. We got it. $1.3 million is our balance. We'd have monthly cash flow of $43.92, so we can actually drop this down to May of 2040. We still got room. May of 2039. No, we'll call it December of 2039. There we go, 1.12 million. We have monthly cash flow of $3,739. Now the point of this video is not to say, well, how long would that last? Generally, based on historical research, a 4% withdrawal rate of our assets, given the fact that our assets are still growing in the future, would definitely lead to monthly cash flow for at least 25 to 30 years. Although we don't know what the future holds. We could have a sequence of returns that really would draw down our assets. The point of this video, like I said, is not to determine whether or not a 4% withdrawal rate is safe or not, but we're just gonna use that standard for the industry. This is utilizing just the total stock market. Again, let's go ahead and change in here. Let's go into our assets. Instead of doing 100% into the total stock market, let's go ahead and change that to 50% in the total stock market. And then we'll do 50% into the Vanguard Dividend Appreciation ETF, VIG. Let's see how that changes our numbers here. We are good here. We actually achieved FIRE a little bit earlier. Let's go back to May of 2039. We're still good. We'll say May of 2038. No bueno. December of 2038 would work here, so 17 years based on these assumptions here. Let's change up the assets again one more time. Instead of 50% total stock market, 50% into Vanguard Dividend Appreciation, we'll go ahead and switch out this other 50% here. We'll come in here and we'll do the other 50% into the small cap growth ETF here, 50% there. We are solid here, December 2038. We've got 3,701 in monthly cash flow. So we'll come on down here, May of 2038, still, nope, not quite, December of 2038. So essentially the same result. Let's go ahead and switch up our analysis here. Instead of our annual income of 60,000, let's say we've got a power couple here. We've got two people, still average Joes, but it's a two-income household, and let's say it's above 60,000. Let's say it's 100,000. And let's say that we're investing 45% of our income here, which means that our monthly investment is $3,750, and our desired monthly cash flow, let's pop this up to, I don't know, $5,000. Let's also assume that our starting balance, let's say we have some assets, let's say just $25,000 here. Okay, so let's make this assumption here, and we'll go to our desired FIRE date, and let's go ahead and plug in May of 2036. Look at that. We're talking 15 years. We've met our goal, $1.8 million. generating monthly cash flow of $6,079. Let's bring this down to May of 2035. We're still solid, but that's just about close to what we're gonna get here. Let's go December of 2034. Still solid. That's about what we were looking for. About 13 and a half years, we'd be able to achieve our FIRE date. Let's go ahead and switch our investments up. We were at 50% in the small cap growth ETF. Let's go ahead and come up here. We've got 50% in the total stock market. Instead, let's go ahead and go into a Vanguard large cap ETF. We'll go ahead and put 30% here. We'll put 30% into the mid-cap growth ETF, 30%. Actually, we'll just do mid-cap, the standard mid-cap here, 30% there. Let's go ahead and do 40% into the small cap ETF right here, VB. Based on these results here, we'd actually achieve it a little bit faster, but not by much. Let's go ahead and take this to May of 2034. Not quite there, almost. Essentially probably June. Nope, not quite. We'll go July of 2034. That should do it for us. Yeah, it does. July 24th, so we're talking just over 13 years to achieve our FIRE goal here based on these investments. Now, one thing I want to bring to your attention, all these investments, we are taking the historical price compound annual growth rate here off of the Vanguard website, and we're taking a dividend compound annual growth rate for the lifetime of the fund. All the dividends here, based on all that data here, what does the dividend grow by every single year on average? And it's also taking into consideration the actual capital appreciation based on this price historically. So we're essentially modeling what we think will happen in the future based on what's happened in the past, based on the compound annual growth rate for the dividend as well as for the price history and the allocation into these different investments based on percentages. So what's possible here highly depends on A, how much money you make, B, how much you can live off of versus invest, and C, when you actually want to retire. Is it as soon as possible, or do you have a little bit of time to where you want to maybe retire in 20 years, but it doesn't need to be rushed into 10 or 15 years? And then of course, do you have any assets right now that we can invest, or are we truly starting from $0? Because if we're talking about starting from $0 here and we make $100,000 and we're investing a little under half of that money, we are done in 14 years, and we'll then have monthly cash flow that we can live off of if we choose to retire. Hopefully you found some value out of this video. I'm not going to extend this and go over all the different variations here because I want to be respectful of your time here. Again, a copy of this spreadsheet is available in the Patreon community if you'd like to give it a test run. There's a link in the description below if you're not already a Patreon member. Hopefully this video gets you really excited about what is possible utilizing Vanguard Index Funds. You don't have to be a dividend stock investor to win with money and to invest for your future and to join the FIRE community and to be financially independent and retire early. Make sure to leave your 2 cents in the comments below, guys. Let me know what you thought about this video, what feedback you have for me, what you want to see more of, what questions or concerns that you have, and what other videos do you want to see from me? Because I don't want to make videos that I want to watch. I want to make videos you want to watch. You are the audience that I'm so thankful for and that I appreciate that you watch my videos at all. And that's all I got for you guys. Have a great rest of your day. Happy month of investing for the rest of this month, and please stay healthy both physically and financially. Have a good one.